Hello students. The students just get me a confirmation first. Updates Nishank, Priyanka. So students, let's start with this today's session. Shiva, Nishank, Arvind, Gagandeep. Good morning to all of you students. Rahul, good morning. So students, I think morning lecture. This I don't know what is the day for the today. I can say not a very specific good morning. I think last night Om sir, he told me that he will not be in a position because he was not keeping well, and therefore he could not take the lecture. And I think that was being intimated to the Telegram channel. Students, ensure to join the Telegram channel. We have given this in our description link in the video. The Telegram channel description link has been given. Do ensure to join, because any cancellation of the lecture or maybe a bit of time, because today I'm actually having a severe headache. I was just waiting for this shop to get open, medical shop, but I think that this COVID situation, they say that 10:30 they are going to open. So you can just imagine the scenario. So nevertheless, but I thought not to call off the session, to take the session. We will continue so that the momentum is there. Otherwise, to call off, the momentum would be lost. So therefore, I will just continue. We will do something, and then tomorrow also, students. My lectures are from Monday to Thursday. These are the lecture, but tomorrow I will take an extra class. Tomorrow, on Friday, I'm going to take extra lecture. Why? Because we didn't did the lecture on Monday, isn't it? So just to compensate that, I'm going to take one extra lecture on Friday. Okay, so whatever be the things, maybe 1.5 hours, whatever be the duration, but we'll take an extra lecture for tomorrow. Fine, students. So let's try to continue with this headache which has been there. Hopefully, when I take the lectures, one thing is there that these some pain and all these things automatically will go away. So hopefully, by the target which I have thought for today's session, that at least we have to complete by section 10. Section 10, what the two charts, so that tomorrow when we start, we can start with house property as a new topic. Okay, so tomorrow I will start with house property, and after house property I will do PGBP and CG, and then salary I will do towards the end in the chart. Why I will do towards the end? It's not that we will not do thoroughly, we do thoroughly, but students, I will prefer to do it towards the end, for the reason being there are a lot of numbers that you have to remember. And then the practical question like total income question also, this will have a lot of salary, chapter 6a. So salary and chapter 6a will require you to remember numbers, the threshold limits. And because you have to remember the numbers and the threshold limits, that is the reason why this particular topic of salary and chapter 6a will do together, back to back, so that immediately after that some questions from module we will look into it and try to crack those questions of the total income, which will involve definitely salary as well. Fine, students? Fine. With that, now let's start, students, with this particular thing. I think we have done yesterday the non-resident taxation. Hopefully all of you would have gone through and revised this thing. You would have seen in your module also very extensively it has been covered. So this is a threat and a danger which is looming large for your examination. If they have covered, then they definitely can target the same in your examination as well. So we have to take all the precautions that if this is what it is, you should try to ensure conceptually you are clear. Similarly, so yesterday's session, students, what we did was 911, the chart, the last chart that you will see the three income that we have targeted in 911 section. You don't remember, students, don't worry about the section, just focus presently, students, only on the concept. Ferry, Sushant, Shruti, Priyanka, Trinad, Sri Swara, Nishan, good morning to all of you students. Let's now focus on this one. Section you don't remember, doesn't matter. Section 9 will be sufficient. We have seen three things, students, yesterday. One was, remember, your house property was there and you have given it on rent. So that rent income, you already are now a non-resident because you, along with your parents, you have moved abroad. So the rental income is deemed to have accrued to you in India. That is what we have seen. So you are a non-resident, but the rental income is deemed to have accrued to you in India, and because it has deemed to have accrued to you in India, this will become what? A foreign. So this will become an Indian income. This will become an Indian income because it has accrued to you in India. This will become an Indian income. Who you are a non-resident, and accordingly, will it be charged to tax under the Act? And the answer is yes. It will be charged to tax under the Act. Second point that we have discussed was about the business connection. The business connection part. First of all, Dave gave you the example of IKEA, departmental store in India. Does the IKEA has a business connection in India? Yes, it has its own branch in India, and therefore income of the IKEA store in India, will that be an income which is deemed to have accrued in India? Yes, it is deemed to have accrued in India. Is it an Indian income? Yes, it is an Indian income. Will it be charged to tax under the Act? Yes. And finally, we have seen in the business connection what it includes and what it excludes. We have seen in the definition of business connection what it includes and what it excludes. So therefore, the include part, we have seen the include part is you don't have your physical presence, but there is some agent of yours who is doing for you either activity A or activity B or activity C, either of the three activity. If that is the case, then you as a non-resident has a business connection in India, and through that business connection, whatever is the income which accrues to you in India, that will be considered as a Indian income. And as we all know, for a non-resident, an Indian income is always charged to tax. There are certain exclusions also that we have touched upon comprehensively, and that is one thing I will suggest that you should always keep in mind, even the exclusions as well. Finally, students, finally, what we also discussed was about the last point of section 9 was the transfer of a capital asset which is situated in India. Two case study we have seen yesterday. One was a direct transfer wherein Mr. X of USA, non-resident, he has invested in the shares of the RIL. Directly he is investing in the shares of the RIL, and subsequently he is transferring that shares of the RIL. So the capital gains arising on such transfer of the shares of the RIL, will it be deemed to have accrued or arise in India? And the answer is yes. It will be deemed to have accrued or arise in India. The second example which I have given it to you was Mr. X now become very clever. And what is this cleverness of Mr. X? He is now putting a company in between. Which company? In my example, it was Z PLC, a company in Singapore, and through that particular company in Singapore, he is investing in the shares of the RIL. He is investing in the shares of the RIL. What we discussed yesterday, therefore, was that through that particular shares, through that particular foreign company, Mr. X of USA has made the investment in the shares of the RIL. So what we have discussed was if the value of that foreign company, which foreign company? Z PLC. If the value of that foreign company is derived substantially from what? Substantially from the Indian asset, which is the shares of the RIL. In that case, the shares of this foreign company is deemed to be situated in India. So the location of the shares of this foreign company will be deemed to be situated in India if what? If the shares of this foreign company derive its own value substantially from the Indian asset. So accordingly, its location would be in India. And if the location of this foreign company, if the location of the shares of this foreign company is in India, then what Mr. X is transferring? Mr. X is transferring a capital asset which is deemed to be situated in India. And if Mr. X is transferring a capital asset which is deemed to be situated in India, then the capital gains arising on such transfer is deemed to accrue or rise in India. Then the capital gains on such transfer will be deemed to accrue or rise in India. Accrue to whom? To Mr. X. This is what we have discussed up till now in yesterday's class. Now with that one, students, let's look upon to the balance area 912 and 913. The salary when it will be deemed to accrue as in India. Yes, Priyanka. Ferry. Salary when it will be deemed to accrue as in India, students. So salary deemed to accrue as in India 912 and 913. 912 and 913. Now, students, in this context, what they say. Let's have a look. 912 says payable by any person earned in India. Payable by any person earned in India. So this salary income will be earned in India or would be accrued in India, or it would be an Indian income. So it will be an Indian income. So when it will be an Indian income? So it will be an Indian income if it is in respect of a services. If it is in respect of what, students? If it is in respect of services which is rendered in India. So if a non-resident employee, he is being put across in India for say a project. Many a times you are put across in India for some project, and because of that project, that non-resident employee will be rendering the services in India. Say for example, Microsoft has got some Indian client. Reliance is their Indian client. So if the Reliance is the Indian client of Microsoft, Microsoft puts its employee to Reliance location in India. Microsoft will put its employee to Reliance location in India. That employee work in India for a period of say 4 months. For a period of say 4 months. Okay, so the basic condition of being a resident is not satisfied. The basic condition of a resident is not satisfied because you require 182 days as one of the basic condition, or 60 days, or last 4 years 365 days together. Even that is not satisfied. So therefore, if the non-resident employee, if he is based in India for a period of 4 months and he is rendering his employment in India, then the salary income for that 4 month, students, the salary income for that 4 month will be deemed to accrue or rise in India. So for that non-resident employee, this 4 month salary that he is getting will be considered as an Indian income. This 4 month salary that he is receiving would be considered as what? As an Indian income. This point number B, students, is quite critical. If you have a look very carefully, point number B in this chart, rest period or leave period which is preceded and succeeded by services rendered in India and forms part of the service. Rest period, students. So say for example, if the employee says to the Microsoft that I will be ready to go to India provided I want 1 month leave. Either you give me 1 month leave immediately before I go to India, or you give me 1 month paid leave. These are all paid leaves he is asking. Or you give me 1 month leave, paid leave, immediately after my 4 months of service. But give me 1 month leave. Employer agrees. He said that I will give you 1 month paid leave. So if your rest period, if your leave period is immediately before or immediately after these services in India, this period for which you are providing the service in India. So if your leave period is immediately before or immediately after, then in that case what? You will also take into account the salary that you have got for that particular rest period or for that leave period. The salary that you have got for that particular rest period or for that particular leave period, as the case may be. Fine, students. So that is what point number B is all about. Now Priyanka, she is asking if the employee is a person sorry, if the employee is a person of Indian origin, we have to check only the first basic condition, if not either of the basic condition. Either of the basic condition. If not either of the basic condition. If the employee is the person of Indian origin, see, basic condition that is there for becoming a resident basic condition which is there for becoming the resident. There is no such particular thing about Indian origin or anything. That Indian origin point came only at one place in our yesterday's discussion. Which is that place where our Indian origin point has come in our yesterday's discussion? When the Indian origin was focused by us in our lecture yesterday. Can anyone tell me in which particular point the Indian origin thing came? What was that point? Only in that particular place the Indian origin was required. Other than that, the Indian origin, or you are a foreign origin, you are born in India or you are born outside India, has no relevance as far as determination of residential status is concerned of an individual. But only in one case that the concept of Indian origin came into picture, which was critical for the purpose of deciding the residential status. What was that particular point? Yes, yeah, Yashmini, that will be taxable. So that Indian origin, yeah, residential status, it was a residential status, but in which context of residential status that this Indian origin point came? In which context of the residential status that the Indian origin point came? That is my question. Pratmat has given the answer. Here, students, if you remember, when that person leaves India for the purpose of employment, at that time it was only Indian citizen. When he is leaving the employment, just think of yourself. I told you, when you are leaving to Singapore for the purpose of employment, you are holding Indian passport. So in that very case, you are an Indian citizen. But when you are coming to India for the purpose of visit, you may be an Indian citizen holding Indian passport, or you may not be the Indian citizen because you may have taken the citizenship of that country, but still you are of person of Indian origin. So the person of Indian origin point was relevant in the case when you are coming in India for the purpose of visit. At that point of time, we were focusing upon that either you are an Indian citizen or you are a person of Indian origin. Think logically. Please don't try to mug up recklessly. You should think logically that when I am leaving India for the purpose of employment, I am having the Indian passport. But when I am coming back for visit, I may or may not be holding the Indian passport because I may take up the citizenship of that country. So I may be Indian citizen or I may be a foreign citizen. But can I still say, even though I have now become the citizen of Singapore, can I still say I am a person of Indian origin? And the answer is yes. So therefore, you will still fall in that exception category, and in which case you will take or you will stick to 182 days. The first basic condition of 182 days. Okay, and that is what would be applicable to you, provided you are coming in India only for the purpose of visit. Then only we will take only the first basic condition of 182 days. The second basic condition will not be made applicable. In this context, herein, salary given in leave period will also be taxable. Yes, it would also be taxable. Salary given in India will also be taxable in this case. The logic, underlying logic which is there, students, why they are capturing, just to expand the tax base, why they are capturing here, it is connected with India. So they were trying to have a connection with India. So therefore, the fact that you are taking a leave immediately before or immediately after, so it is why, because before I go to India, I want to take a leave, or after I have worked in India, I want to take a leave. So there is a connecting factor which the lawmaker have captured for the purpose of even considering that period, which is a leave period, which either would have been before the actual rendering of service in India, or it may be immediately after the actual rendering of service in India. So the salary paid in the leave period will also be taken into account while deciding the income, whether the income is deemed to have accrued or rise in India. Coming to 9-month 3, students, herein, coming to 9-month 3 in this case, in this situation, payable by government to citizen of India, like this is generally for the Indian embassies and all. Okay, now Indian embassy generally who are there outside India, so if the government of India is paying to its citizen for the services they are rendering outside India, the fact that you are receiving the salary from the government of India, in that very case this income will always be deemed to have accrued or rise in India. The fact that you are receiving the salary from whom, students? From whom you are receiving the salary? From Government of India. The income will always be deemed to have accrued or rise in India. Income will always be deemed to have accrued or rise in India. Okay. From whom you should receive? From government. Who you are? You are a citizen of India. Generally, to whom this provision is targeted? This provision is targeted to all the government employee who are posted abroad. And maximum of the employee are in the Indian embassy. So therefore, whenever they pay to their embassy, whatever salary that they are receiving, that salary is deemed to have accrued or rise where? In India. So will it be taxed in India? And the answer is yes. Now you can just imagine these employees now who are staying abroad, these Indian employees who are now staying abroad, by now they have already become a non-resident, because for many years they are staying outside India, serving in the Indian embassy. So they have already become the non-resident. But the fact that they are receiving the salary from the government of India, therefore it will be considered as what? As an Indian income. As an Indian income. What do you mean by Indian income? I told you yesterday also, Indian income means either of the two things. What is that? Either the income should have accrued or deemed to have accrued or rise in India. That is point number one. Or point number two is income which is received in India. So one of the two should have happened, then we can say it is an Indian income. It is an Indian income. Okay. So therefore, students, this is there. But please be careful. The allowances and perquisite paid outside India, students, this is what? This is exempt. Allowances and perquisite which is paid outside India, students, this is what is exempt. Be careful on this part. So all the perks, so all the embassies outside India, they are being provided free accommodation, perquisite. They are being given the allowances, say city compensatory allowances, etc., etc. Many allowances are being given. So there is a full exemption in the allowances and the perquisite. So therefore, what is taxable is the basic pay. Technically, what is taxable, students, is the basic pay. This is what is left out so far as the taxability is concerned. What is taxable, students, then is the basic pay. Keep this in mind, because this they have asked. ICL students have also got practical problem, and I have captured those practical problem in your book, so that you should be very careful that they are asking these kind of questions in their module. So we have to be careful on this one, okay, and not get exposed. With this, we will do our last 916, 5, 6 and 7. This 3 income, students. Now what is this 3 income? Let's have a look quickly. So if you see here, students, in this context, this one, nine, 1, 5, 6 and 7. So this is the income of the non-resident. Which income of the non-resident? Interest income of a non-resident. How the interest will be an income of the non-resident? For example, the non-resident would have given you the loan, and through that loan you are paying the interest to the non-resident. So that will be an interest income of the non-resident. Second, royalty income of the non-resident, that is in 916. And third is the fees for technical service of the non-resident. So like for example, you are a builder and you have appointed a foreign architect firm to provide what? To provide the architect service. Is an architect service, students, is it a technical service? Yes, it's a technical service. So therefore, that payment given by the builder, Indian builder, to the to this foreign architect firm who is a non-resident, accordingly can we say this income received by the foreign architect firm is a fees for technical service? Yes. So first of all, please understand the meaning. What do you mean by income of a non-resident in the form of interest, income of the non-resident in the form of royalty, and income of the non-resident in the form of technical service? Once it is an income, the next step is to understand, can it be considered as an Indian income? Now to consider this to be an Indian income, students, they have to either have to accrue in India or they have to be received in India. Okay, only when one of the two things exist, that this income, which income? Interest income, royalty income, or FTS income, if either they accrue in India or they are received in India, that they will be considered as an Indian income, and only when it is an Indian income, that for the non-resident it will be charged to tax. Only when it is an Indian income, that for the non-resident it will be charged to tax. And that is what we have understood so far. So in this regard, if you carefully go through this particular proposition now, so the payer who is there, students, here, now how they define that interest income, royalty income and FTS income will become an Indian income of the non-resident. So that, students, that is dependent on who is the payer of the amount, who is the payer of that particular amount. So if the payer, students, is government, or if the payer resident, or if the payer is a non-resident, so all these persons are, students, payer. All these persons are the payer. Okay. Now, who is the payer is first step. Second step is, who is the payer is the first step. Payee always, payee means receiver. We all know receiver has to be only non-resident. The receiver only has to be the non-resident. But who is the payer? Either it can be government, or it can be a resident, or it can be a non-resident. Who is second point, students, which I have written over here is the payment is in respect of. Second point I'll just write like this. Point number 2. Payment in respect of. In respect of what? So payment in respect of. So if the government is making the payment, resident is making the payment, non-resident is making the payment, they are making the payment for what? Point number A, business or profession carried on in India. Because of that I am making the payment. Or my source of income is in India. Because of that I am making the payment. Or in the second box, student, second box, if my business and profession is carried on outside India, for that I am making the payment. What payment? Interest payment, royalty payment, or FTS payment. To whom you are making the payment? To the non-resident. Or point number B, source of income is outside India. So as I told you, students, you have to be careful about it. First of all, this income, when it will become an Indian income, for that two step. What are the two steps? Step 1, who is the payer? Who is the payer? It can be government, resident, or non-resident. What is step 2? First, step 2 is that. Step 2 is this payment which is made is in respect of what? Is it in respect of a business and profession which you are carrying in India, or a business and profession which is carried out outside India, or source in India, or source outside India? So you have to decide that first. And once that is decided, students, then you will come down to this particular very important observation. And what is that important observation in this case, students, is this one. This is the answer. So in my first case, resident, non-resident, government paying to the non-resident in respect of a business or profession carried on in India, or a source of income situated in India. If for that I am making the payment, then for the non-resident it will be an Indian income. For the non-resident it will be an Indian income. For the non-resident it will be an Indian income. Okay. Now, what about the second box? For the second box, business and profession carried on outside India. So, or a source of income situated outside India. Now, students, you may be aware, like for example, outside India, Government of India do a lot of projects, isn't it? Like we do a lot of projects for our neighboring country like Bhutan, power plant setup and all, or Bangladesh. So many of our neighboring country, we do a lot of projects for them. So obviously to set up all these things, we will require some sort of a technical support. We will hire, the government will hire some technical expert. Say they have hired a technical expert from Malaysia. So Government of India is making the payment to that Malaysian firm for getting a technical service for a project. Where is the project? In Bhutan. So it is outside India. But as I told you, the fact that students, the Government of India is making the payment, it will always be considered as what? Indian income. It will always be considered as Indian income. But same example, students, same example, take out government from the picture, who is a payer, take out government from the picture, who is a payer, and put instead of government a resident person who is making the payment to this Malaysian firm for its own project in Bhutan. for its own project in Bhutan. So the payer in this example is not the government but the resident person who is making the payment to the Malaysian firm, non-resident, for its project in Bhutan, then it is an income which is deemed to have accrued outside India. It will be considered as an income which would have been deemed to have accrued outside India. Did you all got this one? So this is what it has to be looked upon. Who is the payer? And the payment is in respect of what? On that basis, you will have to find the answer. On that basis, you have to find the answer. What is the answer? Whether it would be an Indian income or foreign income. So see, this is a foreign income. So this will become a foreign income. And yesterday itself I told you that if it is an Indian income, of the non-resident, only then it is taxable. If it is a foreign income of the non-resident, then it will never be taxable. Isn't it? And that's exactly what it is. Now students, can you tell me the difference? I just need to know how many of you can answer this. First, try to understand my question. What is the difference that you have learned between the salary income of a non-resident, when it will become an Indian income, salary income of a non-resident, when it becomes an Indian income, versus fees for technical service, when it becomes an Indian income for the non-resident? What is that thing? One fundamental thing that you would have observed. Okay, because it would be very long to type, but please appreciate, for the salary, what we were checking was whether he has performed or rendered the services in India. What about this case? Are we looking whether he is providing a service in India? We are not looking for that rendering of services in India. What we are only interested is who is the payer of the amount, and the payment is in respect of what. Once only these two criteria is only relevant for us. It is paid in whether the services are actually rendered in India or outside India, we don't care. We only care for two things. One, who is the person who is making the payment, and two, where the payment. The payment is in respect of what? Is it for a business or a source situated in India, or it is a business or a source situated outside India? If it is for a business or a source situated in India, then even though he may give the services from outside India, student, many of the services, they troubleshoot. Like for example, right now in my internet example, if I have to give, I want a technical service. I want a computer technician to manage my computer. Now this is the COVID time. So what will happen? The computer technician stays in Dubai. Now he will tell me, give me the access to your computer, and he will troubleshoot the problem. He will take the access of my computer and he will troubleshoot the problem, and on that basis I will give him the payment. So therefore, students, please understand, did he came in India to provide the service? No. Just being there in Dubai, he have given me the services. And this service, is it a technical service? Yes. I, as a payer, am I making the payment in respect of my business or my profession which is situated in India? Yes, I am making the payment in respect of my business or profession which is situated in India. Therefore, the technical service income given to the non-resident, will it be an Indian income for him? And the answer is yes. Did you all understood this particular point? Students, let me know quickly. All of you? Fine? So students, this is what exactly how it goes. Just remember this very important discussion that I had with all of you just now. And on that basis now, we enter into our question and answers. Let's start with the question and answer. Students, let's start with the question and answer now. Let's take question number 2. Thank you, thank you. Question number 2. I will not do question number 2. Question number 2, homework again. Why homework? Because again the number of days and all. See, this type of questions you'll do as a homework. Okay, I'll do the technical, the difficult one. So whenever you don't have to do anything, you do this kind of a question number 2 and all. But please do it, because in MCQ they will ask you these questions. Question number 3 we will do. Examine the correctness. This is your module questions which I'm doing. So have picked up some very good question of your module and have put up in the chart. And please be mindful, this is not final CA module. This is your inter CA module which I've kept it. So examine the correctness or otherwise of the statement. Income deemed to accrue or rise in India to a non-resident by way of interest, royalty and fees for technical services to be taxed irrespective of a territorial nexus. See, this is a kind of a thing. Irrespective of the territorial nexus. This is such a difficult sentence that they are asking a question in the module. If the students doesn't know the concept, they will not even know what to write. So students, you tell me in this regard. Now, what is this territorial nexus first of all? Students, this territorial nexus is nothing but territorial nexus that they are talking about it. Like in salary, there was a nexus. What was the nexus? I came in India and I provided the service. In business connection, there was a nexus. What was the nexus? There was a business connection in India. The rental income in yesterday's example, there was an nexus. The property was situated in India. In that capital asset which was transferred and you got the capital gains, there was an excess, because the capital asset again was situated in India which you have transferred. So there was a nexus with India. What about interest? What about royalty and FTS income? What is that we are saying? We are saying who is the payer and the payment is in respect of what? Just now in my example I gave it to you that Dubai person, service provider, non-resident, he never entered in India to provide the service. So he never established the nexus with India. He never established any nexus with India or any relationship with India by sitting it in Dubai. He was providing me the services. So we can say that there is no territorial nexus with India. But even if there is no territorial nexus with India, still this particular income is taxable. Why? Because in 9-month-5 and 9-month-6 and 9-month-7, this 3 particular section, what we see is not the nexus with India. What we see is who is the payer and the payment is in respect of what. On that basis, we define whether that payment can it be considered as an Indian income or it will become a foreign income. Whether that payment can it be considered as an Indian income or it will become a foreign income. So even without any nexus, it is still taxable. And that exactly why we say the statement is correct. This statement is correct. In a simple word, primarily that this interest, royalty, fees for technical service income, all these income which is there. So herein, as per explanation to section 9, in income by way of interest, royalty or FTS which is deemed to accrue as in India by virtue of this section shall be included in the total income of the non-resident. Why it will be included? Primarily because it is an Indian income. If it is an Indian income. So if it is an Indian income, it will be included in the total income. Now if it is an Indian income, then we don't care whether or not. What do you mean by whether or not? We don't care. Don't write in the examination, we don't care. This is just for your understanding. We don't care. If it is an Indian income, then we don't care. Why? What you don't care? That whether that non-resident has rendered services in India, we don't care. Whether that non-resident has a residence or a place of business or any connection with India, we don't care. We only require 2 things. Who is the person who is making the payment and I made the payment in respect of what? So in my example, I was a resident. I made the payment for what? For computer, it is used for my business. So the payment was in respect of my business, which is situated in India. That is what it is. And therefore, this fees for technical service income becomes Indian income. The fees for technical service becomes Indian income. Once it becomes an Indian income, then I don't care. I don't care what. That the non-resident, whether he came in India to provide this service, I don't care. He may have come, he may not have come. I don't care. It has already become an Indian income. And therefore, it will be taxable in the hands of the non-resident. I also don't care whether that non-resident has got any residence in India or any physical place in India or any business connection in India. Even that I am not caring for it. It is an Indian income and accordingly will be charged to tax under the Act. I hope that all of you are getting hold with this critical aspect. With this now, question number 4. Let's look upon to question number 4 now. Examine the reason whether the following transaction attract examine the reason whether the following transaction attract income tax in the hands of the recipient. So, point number A. In this case, students, point number A is the salary, the salary paid by the central government. To whom they are paying the salary, students? To Mr. John. To whom they are paying the salary? The salary is paid, students, to Mr. John. Mr. John, who is Mr. John? A citizen of India. How much salary is paid? 7 lakhs for the services rendered outside India. So is it considered as an Indian income? And the answer is yes. It is considered as an Indian income. Now students, salary, see the answer. The net amount is 6,50,000. You will say, sir, from where this 6,50,000 came? This 6,50,000 students came because of the fact of the standard deduction of rupees 50,000. Because of that this particular amount of 6.5 lakhs has came into picture. Point number 2. Interest on money borrowed from outside India, 5 lakhs. By a non-resident for the purpose of business within India, say at Mumbai. In this case. So interest on money borrowed from outside India in this context. Rupees 5 lakhs by a non-resident for the purpose of business within India. So the source, students, is in India. So for non-resident primarily in this regard, so please understand, if the non-resident is making the payment to another non-resident, if a non-resident is making the payment to another non-resident, even in that case, so there is one non-resident who wants to do a business in India. Supposingly, I am a non-resident. Okay, I want to do a business in India and I am borrowing the money from another non-resident, my friend, and he is giving me the loan and I am paying him the interest. So who is the payer here? Who is the payer in this case? Non-resident. So the payer is the non-resident. So accordingly, if the payer is a non-resident, so here you go. The payer is a non-resident. The payer is a non-resident. The payer is a non-resident. What is the next point, students, here in this case? The payer is a non-resident. Then next point in this regard is the payment is in respect of. The payment is in respect of what? The business and profession carried on in India or the source of income situated in India. Is it in respect of a business or a profession which is carried on in India? The answer is yes. So that's it. Congratulations. It has become an Indian income. So this is what, students, you will look into it, and that is how you will decide whether it becomes an Indian income or not. You will decide whether it will become an Indian income or not. Now with this we will come to point number 3. Post office saving bank interest. Post office saving bank interest, students, of rupees 19,000 received by a resident SSC Mr. Ram, age 46 years. Very important adjustment, students. Students, why is it so? I say it's an important adjustment because if you come to the next chart in 10:15, chart number 5, income, just a small correction you will do. Interest income, interest from post office saving account up to rupees 3,500. Students, just make a small correction. 3,500 per annum for an individual account, and if it is a joint account, it is 2 times. So joint means the 2 person, so it will become 7,000 rupees. For a joint, it will become a 7,000 rupees. Okay, so in this regard, students, now coming back to this particular part, again the question, if you see the question carefully, what they are saying. So post office saving bank interest of rupees 19,000 received by a non-resident SSC Mr. Ram. Yes, it is taxable. For him, it is a world income taxable. Resident SSC students, we all know world income is taxable. Yes, it is taxable. So yes, it is taxable. Now second question is, how much it is taxable? First answer was yes, it is taxable. What is the answer that we have to take for second question? How much it is taxable? So how much? Compute. So how do I compute? 19,000 students. 3,500 is exempt in this 19,000. Then 80 TTA, your favorite section. In chapter 6A, you liked only one section. And what is that? 80 TTA. And that, students, saving bank interest, there is a 10,000 is the upper limit of deduction. So you have 19,000, and even after the exemption of 3,500, you will still have got another how much is there? 16,500 rupees. Sorry, 15,500 rupees. After deducting 3,500, 15,500 rupees still is left, and from that 15,500, you will take 80 TTA deduction, so that your final taxable income would be 5,500. The final taxable income would be 5,500. So this is how it would be considered in this context. Fine, students. Now in this regard, students, point number 4, royalty paid by resident to a non-resident. Royalty paid by a resident to a non-resident in respect of business carried out outside India. Outside India, students, what will be the answer? Not taxable. Not taxable in whose hands? In whose hands we are talking about? We are talking about in the hands of the non-resident. So will it be a foreign income in the hands of the non-resident? Yes. But if they are smart, if the ICI is smart, and if I am your examiner, then what I will do? I will change this from resident to government of India. And if I change it from resident to government of India, who is paying to a non-resident for a business which has to be carried outside India, so will that still be considered as an Indian income? Yes, it will still be considered as an Indian income. And that's exactly how it has to be considered. And finally, students, point number 4, legal charges of rupees 5 lakhs. Legal charges of rupees 5 lakhs paid in Delhi to a lawyer of UK who visited India to represent a case at Delhi High Court. So this is a professional income, students. Yes, it is a professional income. So the business connection, students, business connection, is it there? Yes, because he came in India to provide his services. So the business and the professional connection. See, for a business, I told you about IKEA store. For a profession, I will come and provide my services as a professional. So 5 lakhs, if you see herein, in case of non-resident, any income which accrues or arises in India is in Indian income. This is they're talking about the Indian income. And just last, if I have to write here, students, as there is a business connection or a professional connection of the lawyer who provided their services in India. Who provided their services in India. This is how 5 lakhs would be considered. Fine, students. If you are all through, then we can proceed further. As there is a business connection or professional connection of the lawyer who provided their services in India. Fine, students. Now I am proceeding further. Now this another question number 5. Now question number 5 I will directly do from here only. Solution. We can just quickly run through the solution and we can try to wrap it up this one. Students, interest on UK. Now this is a very popular chart which ICI has created. I think all of you may also be aware of this one. But let's try to revise it. If you already have gone through it, we can quickly revise it with the new thought process which you already have done now comprehensively with me, the lecture. So resident and ordinary resident, if you are an individual who is a resident and ordinary resident, then what will be the treatment of this income? Whether it can be considered to be in, see, R and OR, you all know Indian income and foreign income, both of them are taxable. R and NOR, you have to just visualize students. The best learning in a non-resident taxation, or you want to make a career in non-resident taxation, I have already laid down the foundation stone. Congratulations, students. I have already laid down the foundation stone in your life to do a great career in non-resident taxation and transfer pricing. Always whenever you have to look upon to NR taxation, students, you have to visualize the situation. You cannot read and cram by heart. That will always backfire. Visualize the situation. So I told you about R and NOR by giving you the case study. What was that? I told you that look, you are coming in India permanently, but since you are coming in India permanently, but you have a lot of investment in the other foreign country. Now you also have got the bank account in that foreign country, so the investment is getting received in that bank account outside India. So in that case, we have said that this investment income will not be taxed in the hands of R and NOR. R and NOR. So that is a foreign income. Yes, it is a foreign income. Why it is a foreign income? It is accrued outside India as well as it is received outside India. Okay, but the fact that you are a resident, the world income may be taxable. The fact that you are a resident, the world income may be taxable. But in this case, for an R and NOR, this income, please understand, this is not an income which is arising from a business or a profession which is set up in India. This is from other sources. That is the investment income accrued outside India, received outside India, and therefore for R and NOR, that is not taxable in India. And finally, students, that is the non-resident. Non-resident, we already now are very clear on this non-resident taxation, and that is what? That is the Indian income only. Indian income only will be charged to tax. Indian income only will be charged to tax for a non-resident student. Just keep this in mind. With that, now students, let's take the things further. Quickly, we will run through it. First one, students, is interest on UK development bonds, 50% of interest received in India. UK development bond, so it implies it is UK. 50% is received in India, so it implies what? Accrued outside India, yes. Okay, but 50% is received in India. So students, Indian income is 50%. Indian income is 50%, isn't it? But be careful, students. This part, if you are a resident and ordinary resident, whether it is an Indian income and foreign income, whether it is an Indian income or foreign income, does it have any relevance? No. So fully it will be taxable. The foreign income and Indian income is relevant only in these two cases. Only in these two cases. So in this case, this is a foreign income, yes, but up to the extent of 50% because it is received in India. To the extent of 50% because it is received in India, it has become an Indian income. And if it has become an Indian income, then whether you are a non-resident or whether you are RNNOR, it will be taxed. But the balance 5,000 rupees which you have, which is accrued outside India as well as received outside India, that will not be taxed for non-resident as well as for RNNOR. That foreign income which is accrued outside India and received outside India, that will not be taxed in the hands of the non-resident and RNNOR. Can you look into the second one? Income from business in Chennai. 50% is received in India. Doesn't matter. It is a business in Chennai. Where it is accrued? Where it is accrued? In India. So the fact that it is accrued in India, Indian income, it is fully an Indian income. And if it is fully an Indian income, then in that very case, it would be taxable irrespective of your residential status. Irrespective of your residential status. Coming to the third one, short-term capital gains on sale of shares of an Indian company received in London. Short-term capital gains on sale of shares of an Indian company received in London. So, sale of shares of an Indian company received where? In London. So, in this context, 20,000, 20,000, 20,000. So, can we say sale of shares where it is located? Where it is located? It is located in India. So the shares of an Indian company, where it is located? It is located in India. And therefore I told you yesterday also in our case study, X has transferred to Y. In our case study number 1, students, case study number 1, X has transferred to Y the shares of RIL. Where he has transferred? He has transferred the shares of RIL in USA. So the money he has received in USA, but that transfer was in respect of an Indian asset. That is the asset which is situated in India. So therefore, can we say it is accrued in India? Yes, it is accrued in India. And therefore, can we say it is an Indian income? Yes, it is an Indian income. So if it is an Indian income, will it be taxed in all the cases? Yes, it will be taxed in all the cases because it is an Indian income. Because it is an Indian income. Fine, students. That is how it has to be considered. Next point, dividend from British company received in London. Dividend from British company. Where it is received? In London. Accrued outside India, received outside India. Is it a foreign income? Yes, it is a foreign income. So it is a foreign income. Now foreign income for R and OR, we don't care. It is fully taxable. But for R and NOR, not taxable. And non-resident, not taxable. R and NOR, not taxable. Non-resident, not taxable. For R and NOR, foreign income, if it would have been from a business or a profession which is set up or controlled from India, only in that case for R and NOR, the foreign income is taxable. But other than that, in respect of any other foreign income, for R and NOR, it is not taxable. It is not taxable. So this is dividend from British company received in London. Okay, from British company received in England. Who is receiving? Individual. I am an individual. An individual is receiving. What is my residential status? 3 things. And based on those 3 things, you are supposed to answer the scenario. Long-term capital gains on sale of plant at Germany. Students, now no queries and all. Just let me first finish it off this one and then I'll take the queries. Just pay attention to this one. Long-term capital gains on sale of plant at Germany, 50% of profit are received in India. 50% of the profit is received in India. So, sale of plant, where the asset is situated? Where the asset is situated? Outside India. Plant is at Germany, outside India. But, so accrued outside India? Yes, accrued outside India. But 50% of profit are received in India. So that 50% is an Indian income. 50% is what? An Indian income. So in that very case, if it is 40,000 amount, so whether if you are an R and OR, then the total long-term capital gains of 40,000 is fully taxable in India if you are R and OR. But if you are R and NOR in this case, or a non-resident in this case, then only the Indian income, only the Indian income will be taxed. So how much represents Indian income? 50% of 40,000. 50% of 40,000 represents the Indian income. So accordingly, only 20,000 rupees will be taxed in the hands of R and NOR and non-resident. This is how it has to be considered, students. Coming to the next one. Coming to the next particular part. Income earned from business in Germany which is controlled from Delhi. Income which is earned from business in Germany which is controlled from Delhi. So accordingly, business students, be careful. Who has to be careful? R and NOR has to be careful, because in this case for R and NOR it will become taxable. So income earned from business in Germany which is controlled from Delhi, out of which 40,000 is received in India. So how much is the Indian income? Indian income is 40,000. Okay, balance 30,000 is foreign income. So foreign income is not taxed in the hands of non-resident. Okay, so only 40,000 which is an Indian income is being taxed. What about the second one? Foreign income would not have been taxed, but the fact that this is the foreign income which is in respect of a business or a profession which is set up or controlled from India, therefore the foreign income of rupees 30,000 along with the Indian income of rupees 40,000, both of them taken together will be taxed even in the case of a R and NOR. Both of them will be taxed even in the case of R and NOR. Coming to the next one, students. Profit from a business in Delhi but manage entirely from London. Business in Delhi but manage entirely from London. So business in Delhi, so it is an Indian income accrued in India. It's as simple as that, fully an Indian income because accrued in India. So accordingly, on that basis, fully taxable for all. Income from house property in London. So house property is in London, capital asset situated in London, so accrued outside India. We have to see whether it is received or not. Deposited in a bank in London, so received also in London. Later rate remitted to in India. I told you earlier also that remittance is not equivalent to receipt. So it is purely a foreign income, both accrued outside India and received outside India. Both has happened, so it is a foreign income. But as far as R and OR is concerned, we don't care, because world income is taxable. So therefore, fully taxable for R and OR, for R and NOR, and for non-resident, it will not be taxable. Interest on debentures in an Indian company. Interest on debentures in an Indian company received in London. So Indian company accrued in India. If it is accrued in India, Indian income. If it is an Indian income, tax in the hands of everyone. Fees for technical service rendered in India but received in London. Technical service, fees for technical service rendered in India but received in London. So we assume that in this case it is accrued in India. Okay, where it is received, we don't care. Where it is received, we don't care. It is accrued in India, and because it is accrued in India, therefore it is an Indian income, and we all know Indian income is taxable for everyone. Indian income is taxable for everyone. Next point, profit from a business in Mumbai. In business in Mumbai, managed from London. Same thing. Again, that was in Delhi, this is Mumbai. So this kind of question ICI should avoid. Income from property situated in Pakistan and received there. Property situated in Pakistan and received there. So accordingly, in this case, it is a foreign income outside India and received also outside India. So therefore, it is a foreign income. And then in that situation, it will be 16,000. Okay. Foreign income taxable only in the hands of whom? Only in the hands of R and OR. Next, this is important, students. This is important. Next one is important. Past foreign untaxed income brought to India during the previous year. Past foreign untaxed income. So in this case, it is not taxable to anyone. So why it is untaxed? For any reason. Like in those years I was non-resident. So in that example, students, the income was there when you were there in Singapore. Okay, when you were there in Singapore and you were the non-resident, then that time the income was there in Singapore. Then you are, after you are settled in India, so it was not taxed in India. Why? Because you are a non-resident and it was a foreign income. So therefore, for those years, it was always not taxed in India because it is a foreign income. Now you are bringing, because you are settling in India, you want to bring all this income back to India. So now whether it will be taxable, and the answer is no. The taxability is decided at the time of its accrual. So if it was not taxed then, if it was not taxed then, it cannot be taxed now. What is the slogan that you will say in your home? You will say in your home, in front of your parents, what are you going to say? If it was not taxed then, it cannot be taxed now. Say loudly to your parents and let me know their reaction. What is the reaction? The reaction needs to be known. So that is what you will speak about it in this regard. Okay. So in this context, students, so past foreign untaxed income, past foreign untaxed income, so therefore it will not be taxed. Coming to the next one, income from agricultural land in Nepal. Income from agricultural land in Nepal, received there and then brought to in India. So received there and then brought to in India. In this case, students, what we will say? In this case, what we are going to say? We will say that it will be a deemed income. It will be a foreign income. Why it is a foreign income? Because accrued outside India, received outside India, later on remitted in India. But that remittance does not make this as Indian income. So it is a foreign income. But as I told you, foreign income is applicable only for whom? Only for the non-resident RNOR. Rest all the category, it is not taxable. Students, rest of it you can just go through it once. I think they are quite simple. Now they are all simple in this regard. I have done primarily all the tricky area. 2-3 I am just leaving for all of you to just go through it quickly. Now students, in this context, the exempt income. Now students, in the exempt income, you have to focus primarily only on few exempt income. 10AA is also there, SEZ. But I have covered SEZ, students, with AMT. I have covered SEZ with AMT. Fine, students. So I have covered SEZ with AMT. You will read this particular part, students. Have you gone through this particular thing? So we are done with this residential status, income what deemed to accrue rise in India, all that we have done with it. Now all the 4 charts we have done it comprehensively. Now we are in our 5th chart, and that 5th chart is all about the exemption. Exemption, students, which are the exemptions that you all have to remember for your IPCC level. So here lies the few exemptions, not all of them. I'll still mark for all of you. 10.1 is very important, goes without saying. Next is 10.2, share of partners from the partnership firm. HUF. 10.2A, even that is important. 10.2A, even that is important. 10.10BB, payment to Bhopal gas victim. 10.10BB, payment to Bhopal gas victim. Then 10.10BC, compensation received or receivable from the central government, state government, local authority by an individual or legal hire on account of any disaster is exempt. So we all know, like just now, unfortunately, that incident happened in the Kerala, plane crash happened, and therefore in that situation, whatever compensation is given by the state government and the central government to the family members, those will not be taxable. Why? It is fully exempt under 10.10BC. Then 10.10D, any sum received under a life insurance policy, including the sum allocated by bonus on which policy, shall be exempt. So this is one thing, sum received under a life insurance policy, this is exempt. So that is one thing that you will keep in mind. After that, 10.16, the scholarship granted to meet the cost of education would be exempt from tax. Students, you may not be aware, but your stipend is covered over here. You may not be aware at all about this point. So your stipend, students, actually gets covered over here. In this case, you may not get a feel of it primarily, but your stipend gets covered over here. Fine, students. So that is one thing. Then the daily allowance received. This should be taxable. 1017. If tomorrow I become a finance minister, the first amendment I am going to do 1017 I am going to delete. So you have to take the responsibility of making me the finance minister soon. So 1017, what it is? Daily allowance received by any member of parliament or state legislature or any committee thereof. They are exempt. Okay, so they are exempt. So that is one point that you should keep in mind. Presently they are exempt till the time I become the finance minister. Right, in the examination you will get good marks. So that is one thing which you should be careful about it. Now accordingly, I think that much is sufficient, students. If that much is sufficient, after that you can just stop primarily. Fine. Any case, let me see if I stand for election or not. That is a future thing. I don't intend to go in politics, but with your support, why not, isn't it? Now students, last point, couple of this one, 1034, very important. Dividend. Why it is important, students? November 20 item, students, this is the last. From May 21 it will not be there. Up till November 20, shareholder who is receiving the dividend, they are claiming the exemption. They are claiming the exemption, students, in this case. Okay. From May 21, November 21, the dividend income is taxed. Fully it is taxed in the hands of the shareholder. Fully. Right now there is a exemption threshold. Threshold of exemption is there 10 lakhs. So if I am a there are two shareholders of Reliance. I am a shareholder of Reliance, and Neeta Ambani, she is also the shareholder of Reliance. Okay. Now I am getting, students, a dividend from Reliance of rupees 5,000 every year. Neeta Ambani, she is getting dividend from Reliance of rupees 35 crores. Because obviously she has that much of stake, number of shares. I am getting 5,000 rupees. She is getting 35 crore rupee. So what will happen? I will enjoy with my exemption. Fully get my exemption primarily because I have not crossed, not only for one company, in aggregate also, all my shares, I don't cross this 10 lakhs limit. So I am getting my full exemption because my total dividend income is within the limit of 10 lakhs. But what about her? In one company only, that is Reliance, she is getting 35 crores of dividend. 10 lakhs only would be exempt. Balance all the dividend of Reliance, of other company, balance whatever be the amount, that will be taxable in the hands of Neeta Ambani. And that exactly what would be the situation. Fine, students. And yes, at what rate it will be taxed? So you can just write, students, herein. I am just making you write. Yes, Harish, perfect. Yes, Priyanka, DDT is abolished. Perfect. For May 21, November 21. But for November 20, it is there. Please write here. The dividend in excess of rupees what? 10 lakhs. In excess of rupees 10 lakhs shall be taxed at the special rate of 10%. Shall be taxed at the special rate of 10%. Just write this sentence. Only for November 20 I am talking about it. May 21, don't even think about it. The dividend in excess of rupees 10 lakhs shall be taxed at the special rate of 10%. Fine, students? Yes. Now 10-15 students, we have already discussed that this is important. Not all of them have to be remembered. Post office you remember, students. This Sri Lanka and all, this is not required. They will not ask you this Sri Lanka and all. Point number 6 is a new amendment, but actually this is more important for final CA, because this is for International Financial Service Center, which is a topic for final CA. So you can ignore it primarily. Just remember only one thing. And what is that one thing? That is about this particular part of post office scheme. Just remember that is important. And this is point number 4. You can just say here, Government securities. This point number 4. Interest on notified security bond and certificate. Which is this security bond and certificate? They would all be students. They would all be government securities. Fine. So that is one thing which you should keep in mind for section 10 exemption. For section 10 exemption students, just keep in mind this particular part. With this one now, the only area which is left is now the agriculture income. The agriculture income. Now students, I think all of you are aware of the grossing up also. The integration which has been there. Now let's look upon to the agriculture income quickly. Concept of agriculture income. First of all, what constitute agriculture income in this case? So the definition has been given to you. What constitute agriculture income has been given to you, and some special examples. So this is the meaning. One is the meaning and this is the examples. So there are some special examples on what? Example of what will be considered, what is yes and what is no. Example of what is yes and what is no. Now this partial integration students, this is one very unique thing which I want you to go through it. I think this every one of you are aware also, but still let's read this one together. SSC should be individual HUF AOP BOI, meaning thereby the SSC which is having a slab rate, that is slab rate SSC. This is about by you have to add agriculture income and then calculate the tax, and thereafter you will take the rebate, you will give the rebate. So in this regard students, SSC should be the slab rate SSC. Purpose: agriculture income has to be aggregated with the non-agriculture income for determining the rate at which non-agriculture income is to be taxed. Condition to fulfill: agriculture income should exceed 5,000 per annum. So it means that if I have to do this aggregation, then my agriculture income should exceed how much? Rupees 5,000. And if it does not exceed rupees 5,000, then forget it. This aggregation will not be there. Simply you will say fully exempt. Now students, one thing I will just bring to your notice. Please pay attention to this point. This concept will be applied in that question. Students, you will write here. This concept will be applied in that question. Which question? The question which is asking you to calculate the tax liability. Again, I am repeating students, be very careful about this. So I am writing over here this concept, partial integration concept. This concept to be applied for that question which this concept to be applied for that question which has which is for computing the tax liability. Computing the tax liability. Underline the word tax liability. If the question is only for computing total income, if the question is only for computing total income, then the then the agriculture income will be fully exempt. No, only Priyanka, 5,000 is for agriculture income. The 5,000 threshold is only for the agriculture income. So just keep this note in mind students. Only that question which talks about calculating a tax liability, that this concept of partial integration would be undertaken. Otherwise, if it is only about total income, then what you are going to say? Exempt under section 10(1). Exempt under section 10(1). Read the question very carefully in the exam. Now with this one students, so partial integration. So let us take a computation of the tax. I'll directly take you through to the practical question, students. Step 1, tax on non-agriculture income plus agriculture income. So as I told you, you will first include both. So step 1 is tax on non-agriculture income plus agriculture income. What about step number 2? So step number 2 is tax on agriculture income plus the basic income limit. So now first, after you have calculated a tax on non-agriculture income plus agriculture income, then step 2 would be to calculate tax on the agriculture income as increased by the basic income limit. As increased by the basic income limit. So tax payable would be step 1 minus step 2, and thereafter you will do what? The surcharge or the rebate of 87A, and finally the cess of 4%. This is a step that you will keep in mind, students, so far as the tax liability calculation is concerned. I think there is one question which has been there in this context. This is question number 1. Students, if you see this question number 1 over here, Mr. Vivek, question number 1, Mr. Vivek a resident has provided the following particulars of his income for previous year 1920. Income from salary computed 2,80,000. Computed means after standard deduction. Income from house property computed 2,50,000. This word is important, students, because if this word is not there, then you have to then give the standard deduction. Remember in the previous question, in the previous slide you have done for non-resident taxation, I think that was your second question that we were discussing, or the third question, sorry, third question that we were discussing. In that, there was a salary income from the government of India to an Indian citizen who was providing the service outside India. 7 lakhs was the amount, and we gave a flat 50,000 deduction. So if they only provide you the salary, please don't then forget in the total income. Please then don't forget in the total income to give the effect of the standard deduction. Same also would be for the rental income. If they only provide you the rental income is this, so you will have to ensure that you will give the effect of the standard deduction while you compute your total income. Over here, if you see, students, over here, if you see in this regard, so here salary income is 2,80,000, which is computed. Since they have mentioned computed, don't make this mistake again of providing 50,000 extra deduction. Don't make this mistake. House property also computed 2,50,000. Agriculture income from a land in UP 4,80,000, and expenses on earning this agriculture income is 1,70,000. So therefore the net agriculture income is how much? 3,10,000. Now if the question would have been only about the total income, I would have exempted 3,10,000 in the inner column, and in the outer column I would have taken as nil, which is what they have done it over here. And then my GTI is 5,30,000 and my total income is 5,30,000. That's it. Game over. Nothing have to think about it further. But the question is about the tax liability, then I will influence my working like this. And how the working will be done? So tax on 5,30,000 plus the agriculture income. How much is agriculture income? Then I will add 3,10,000. So I will calculate on 8,40,000. The tax already calculated is 80,500. Then step 2, as you all know, the agriculture income plus the basic income limit, which is 2.5 lakhs. So 5,60,000, 24,500. Then step number 3 is 2 minus 1, 80,500 minus 24,500, 56,000. And finally 4 and 5, which is about what? Add to this the education cess. Please ensure, students, since your total income is 5,30,000, rebate of 87A is not provided over here. Had my total income would have been like 4,90,000, something like that, I would have then given the rebate of how much? Of rupees 12,500 maximum. I would have given the rebate of maximum 12,500 in this particular case. I hope that all of you have got hold with this particular integration concept. Fine, students. Now the last point, students, which I'll discuss with you, the last concept. Please come back to this particular part. Now can you see over here? Can you all see in this regard? There is this particular concept which is also there. Tax treatment in the case of composite business model. This part. This is rule 8, 7a, 7b and 7b. This, students, you have to by heart. Very important MCQ questions they can ask. See what happens in the case of tea industry. There is a composite activity. Agricultural and non-agricultural, both of them are composite. So what they have done is that they have given you a percentage. That look, in these cases when the business is a composite business and you have got what? Agricultural as well as non-agricultural income. What is agricultural income? Growing of tea leaves. Growing of tea leaves is an agricultural income. But the tea leaves, the Tata Tea Company, what I do? I take that tea leaves from the tea garden and I take it where? In the factory, and from that tea leaves I manufacture the tea powder. Now that manufacturing is non-agricultural activity. So what I will say, that both the non-agricultural as well as the agricultural activity are composite in nature. Both of them, students, are composite in nature, and therefore they have given you an artificial percentage to be applied on your business activity to decide how much portion of this business income will be agricultural and how much portion of the business income will be non-agricultural. So therefore, for that, students, you have got certain rules, like rule number 8, for growing and manufacturing of the tea, 40% and 60%. So 40 constitute non-agricultural, 60 constitute agricultural. Next, rule 7a, it is growing and manufacturing rubber in India. So that is 35 and 65, and then coffee 25 and 75. But coffee, students, there are two rates. One is 25 and 75% and another is 40 and 60. See, if it is only the normal coffee bean, and then you do the manufacturing of the coffee powder, then it is 25 and 75%. But if it is a roasted coffee, then what you do? The same coffee bean further is roasted. So it means that there is manufacturing activity is more in that. In the case of which coffee? Roasted coffee, the manufacturing activity, which is a non-agricultural activity, is more in that, and therefore as per rule 7b, my non-agricultural component is 40% and my agricultural component is 60%. As per rule 7b, my non-agricultural component is 40% and agricultural component is 60%. But if it is normal coffee, 25-75. 25 is non-agricultural and agricultural is 75%. So you have to remember this. What about if I am having a sugar factory and I am also having sugarcane field from where the sugarcane is grown, and I take the sugarcane and take it in my factory to manufacture the sugar. Now even that is a composite activity. Growing sugarcane, agricultural. From sugarcane to making the sugar, manufacturing the sugar, non-agricultural. So even this is a composite activity for all the SSC who are engaged in the business of manufacturing of sugar, and for whom they have got their own sugarcane field. So they are also engaged in the both composite activity, agricultural as well as non-agricultural. Now you don't have a percentage for that, because you have got percentage only for the three products: coffee, rubber and tea. What about for sugar? It is not there. So what you will do in that case? Can you see the next line? The next line shows what they have said. If you see the next line, in this case, rule number 7. In any other case, rule number 7 will apply. And what is this rule number 7? FMB of any agricultural produce which has been utilized. So FMB of what? Any agricultural produce. What is my example of agricultural produce? Sugarcane. So take the FMB value of the sugarcane, and that value is your agricultural income. And if that value is your agricultural income, this value by default would be, that value will be deducted. Why it will be deducted? Because it is an agricultural income. So the FMB value of your agricultural produce, in my example it was sugarcane, that value will be what? Will be deducted. Okay, why it will be deducted? Because it is exempt. So this question, students, can you see this for your question number 2? This is what the question is. So this question, students, I am leaving you with this question. would be an assignment for all of you. Please ensure to go through the question. It's a simple one. So what you will reduce would be, in this case, the FMV value in this scenario. So the FMV value primarily would be reduced. So ensure to go through this particular question number 2, and that should be all in this regard. So this is your exempt income, students, that we have done it. Primarily, students, just ensure to do this one. Simple question is there. So we have done with this one. Now, as I told you, the heads of income, we are going to start from tomorrow. Fine, students. So tomorrow also 9:30 will be the time, but students, tomorrow I would be taking the session for 1.5 hours. Okay, as such, today was also for 1.5 hours. Tomorrow also for 1.5 hours. I'm going to take the session tomorrow. Okay, 9:30 we'll start. Probably 9:30, 9:45. Just considering Om sir between that time. And again, I'm repeating Telegram channel. I have given the link in this one. Join the Telegram channel and please tell to all your friends. Again, I'm repeating. I'll keep on repeating this thing to tell them, because this sort of a revision is the most comprehensive revision that we are doing it. Tell them to take the benefit. They will definitely will thank you later, primarily, of ensuring that they are going through this important revision class. Any query, students, that you may have, you can quickly wrap it up. Give me for this one. Thank you, Ferry. Yes, Priyanka, I will definitely will do that. So students, please keep revising then. I think today's session was quite clear in terms of the entire concepts and all. So let's then start, students, in the next session for house property. See you then. Do take care of yourself, and my headache is gone. Thank you very much.